For the past 3 decades, the Chinese economy has been booming, transforming itself into the world's manufacturing hub. Buy any electric good, and chances are it will say made in China. But the Chinese economy is now in crisis. A property collapse has seen prices fall and flats remain unfinished. Combined with COVID lockdowns and political meddling, Chinese consumers have lost confidence and reduced spending. There's been a decline in savings, falling wages, and rising youth unemployment. The result has been deflation, with prices falling throughout last year. Now, whilst there are significant benefits to lower prices, the response of the Chinese government to subsidize manufacturing is ramping up trade tensions and making it difficult for UK and European manufacturers. Let's take a closer look. In the boom years, China grew at up to 10% a year. Manufacturing production soared, and Chinese firms undercut more expensive Western production. It was a significant cause behind the deindustrialization, the decline in UK and US manufacturing. Only very specific firms can now compete with low-cost China. Now, on the positive side, UK consumers definitely benefited from lower prices and cheaper manufactured goods. But this also led to a persistent current account deficit, and there was a concern that the UK economy was becoming unbalanced, relying on high spending, imports, and then Chinese capital flows to finance the deficit. Last year, the UK ran a trade deficit of around £26 billion with China, but with China's deflation, this is likely to grow in the coming years. But first, if you found yourself on holiday in a foreign country which blocked domestic news, how could you get more reliable news sources? Well, why not consider NordVPN? NordVPN enables you to improve browser security and use IP addresses from around the world. From a practical point of view, when I was on holiday in Europe recently, I could watch BBC iPlayer and watch Match of the Day. With NordVPN, you can watch US-only Netflix shows or access sites which are blocked by region. With NordVPN, you can get high-quality entertainment quite cheaply. Grab your exclusive NordVPN deal by going to get a huge discount of your NordVPN plan plus 4 months extra free and an extra gift on top. And it's completely risk-free with Nord's 30-day money-back guarantee. In the boom years, China saw an explosion in house building, but developers got greedy. They started to sell houses before they had been even built. It was a bit like a Ponzi scheme. Now, many Chinese householders invested their savings in property. They don't have too many other options. But when property developers collapsed, it led to ghost towns across China, half-built houses that couldn't be sold. Now, property used to account for nearly a quarter of the Chinese economy and was responsible for a lot of the recent economic growth. But the truth is, now that the house price is falling, the property sector is going into reverse. Now, the price falls will be even greater, but they've been artificially kept high by local councils worried about the impact of a collapse in prices. On top of this, the COVID lockdowns in China were amongst the strictest in the world. It harmed investment, entrepreneurship, and damaged government. And the Chinese government has also become increasingly authoritarian, clamping down on entrepreneurs, which has reduced innovation and investment. So with the property sector doing very badly, they've tried to boost other areas of the economy, such as manufacturing, which are still very good at. Now, last year, China experienced deflation, which means prices are falling. Now, after our struggles with inflation, this may seem like a good thing. But deflation can itself be very damaging. China will be nervously looking over its shoulder at the likes of Japan, which saw a property collapse in the 1980s and has had a couple of decades of deflation and very low economic growth ever since. The problem is that deflation in China has been accompanied by falling wages, especially for office workers, and growing youth unemployment. So when prices and wages are falling, the real value of debt increases and consumers lose their confidence to spend, and this is likely to harm economic growth in China. And this will lead to lower global growth given the weakness of the European and UK economy. A slowdown in China is another negative factor weighing down the economy. But the biggest issue is that given the problems in the property sector, the Chinese government are aggressively promoting Chinese manufacturing, which is still good at doing. And in particular, the new green technologies such as electric batteries and solar panels are gaining large subsidies from the government. And Europe and the UK will complain that this is protectionist policies, unfair competition, artificially reducing prices so that UK and European firms have no chance of competing. For example, electric battery makers in China were offered subsidies that accounted for around 50% of the price, making it much cheaper than anything comparable in Europe or the UK. The result is that there's been a flood of cheap imports into Europe, and this will harm European and UK manufacturing. And it doesn't help that the US has been doing its own industrial policy of subsidizing these green technologies. European car firms have already seen a decline in market share because of the success of Chinese electric vehicles. But continued state support will further their comparative advantage. Last year, China experienced a trade surplus of $823 billion with the rest of the world, but this could continue to grow in the coming years. And the UK already has concerns about it being too reliant on consumer spending on imports for running a persistent current account deficit. And it's argued that countries with large deficits tend to require higher government borrowing to kind of help the economy. China's deflation and continued support of manufacturing could make this even worse. How does this all affect the British householder? Because on the one hand, low-cost Chinese exports give a short-term benefit to consumers. We can buy electric vehicles and solar panels much cheaper. And there's no doubt that without Chinese manufacturing, it would be more expensive to put solar panels on your roof. But continued subsidies do amount to unfair competition, and it will be very difficult for UK or European firms to become established with these new technologies and become competitive. And also with the US policy of subsidizing green technology, it means that any global firm wanting to invest in a new battery factory can demand a very hefty subsidy from any government. For example, in the UK, we're expected to pay around £500 million in subsidies to Tata Group to support a $4 billion battery factory in the UK. Supporting new industries, especially around renewable energies, has got very expensive. However, there is also one very welcome benefit of Chinese deflation. Manufactured goods are becoming cheaper. Chinese export prices fell by 9% last year, according to Bloomberg. This leads to lower inflation in the West. It helps to counter the lingering service sector inflation. Also, China's economic slowdown has been critical for reducing commodity price inflation. Oil prices fell last year, and this is a kind of positive inflation shock. It will be very welcomed by the Bank of England, who would like help reducing inflation without having to push the economy further into recession. China and Europe have very different economic models. Europe rely more on the private sector. In China, the economy is more directed by the state. But it means that the UK and Europe may need to consider more seriously protectionist measures to limit the flood of markets with cheap manufactured goods. But the problem is that any trade war will itself have very negative consequences. Placing tariffs on solar panels or electric vehicles will just make it more difficult for consumers to transition to a greener economy. But also it could lead to retaliation, and UK brands like Jaguar and Range Rover, who currently have a niche in exporting to China, could be hit. Now, whilst China has experienced a real property crisis, what about the UK? What holds in store for the UK this year? Check out this video for the prospects for the housing market in the coming year.